How are you guys doing? This is Ryan, welcome back to the channel. Today we're going to be talking about the top 10 positions in my entire portfolio. My entire portfolio currently consists of $159,348.43 in all my brokerage accounts. I have 4 primarily that are of decent size. Some of these are IRAs, some of these are taxable accounts, some of these are Roth IRAs. But I've been getting the question a lot lately. People have been calling me and saying like, hey Ryan, what's a good stock to buy? I don't think that's a very good question. I think instead a good question is, hey Ryan, what do you do to identify a good stock? And actually after watching this video, you'll kind of figure out that I'm not even that big of a stock picker. And I will also be disclosing some stocks I've never told anyone on YouTube that I own because they fall into my top 10. So with that said, let's jump in the video. Well, actually started from my largest position and worked my way all the way down. Now I'm 31 years old and I came up as a sales rep and eventually worked my way into entrepreneurship. So those were my main focuses, was going out and learning how to make more and more money by selling more and by growing businesses. So it really wasn't until recent years I really got into individual stock picking. What I did instead is I knew that I needed to put money away for the long term, so I would passively put money into retirement accounts. And that'll reflect in this video. If you work for a company that offers a 401k with a match, that's free money you're leaving on the table. And the company I've worked for a long time, I actually now have ownership in, and I've always taken advantage of the matching system that we allow in our workplace. So with that said, my largest position is a target date fund. If you don't know what a target date fund is, you pick a year that you're likely to retire. Mine is 2055, and it kind of follows this cliche. The further you are away from that date, the more aggressive the fund's gonna be, the more equities it's gonna buy, and the older you get, the more the fund will probably become less aggressive. It'll buy more things like bonds or larger market dividend stocks and things like that. Less volatility as you get older. And I may actually change this, and I currently have $25,373.72 into that fund. And this may actually end up changing in the future as I become more comfortable and trust myself in doing my own portfolio management instead of relying on these target date funds. This year I'm really encouraged that in my Robinhood account, which I personally manage, I've made over 52% in. So we'll see how long I can get good returns like that. And if that trend continues, it makes more sense for me to manage my funds rather than a target date fund like this one. So since I've been passively putting money into this 401k plan for all these years, the second position also comes from this 401k. It is an index that buys the S&P 500. Similar to something like the VOO from Vanguard, VOO, which is one of the most popular ETFs, which is a very popular way to index the top 500 companies in the United States. And in that account, I have $15,658.57. Now in the 401k, I should mention, I split the difference currently. I do 3% into a Roth 401k and do 3% into a traditional 401k. And the difference really is that the Roth portion of it, I'm paying taxes today, so I don't have to pay those taxes in the future. In the traditional 401k, I'm deferring taxes, so I'm not paying those taxes today, but I'll have to pay them in the future. I'm kind of hedging my bet because I don't know what taxes will be in the future, and I don't know what my income will be in the future. It means that I'll be kicking myself either way. If I defer taxes and I have to pay all these taxes in the future because I make a lot more money when I'm older in retirement, I'll be really upset I didn't pay those taxes when I made less money when I was young, or vice versa. But at least with this, I'm hedged no matter what happens in the future. This is not financial advice. None of this is financial advice. This is what I do with my money and the way I strategize for my future. And my next largest holding is one of my favorite holdings, and that is Tesla. I've actually taken profits from this position. I document on the channel, and I'm kind of kicking myself for that, but I still hold 10 shares with a total equity currently at $13,940 on the dot. I'm not gonna go in depth on Tesla because I make a lot of videos about Tesla on the channel. If you wanna see those, just go through my channel, look at the last video I posted. We won't go too in depth on that, but Tesla has performed very well. I bought the stock at an average price of $260. I have taken profits, and I intend to stay long with the rest of my position for the foreseeable future. My fourth largest position is back into the 401k, and that is a diversified dividend portfolio, another index that really tracks dividend companies that pay dividends. So you'll see a lot of dividend kings, companies that have been around for a long time like Johnson & Johnson, Pepsi, Coca-Cola. They have great track records of paying dividends to their shareholders. So not a lot of volatility in this fund, just a consistent grower over time. And the fifth largest position You guys are probably gonna all think this is crazy, but it is bonds. Specifically, ticker TLT. I hold this in an IRA, and this really goes into the strategy of the all-weather fund. I've made an entire video about the all-weather fund. I'll link it in the description below, and I'm actually really happy with how it's performed. It has beat the market this year by a lot. I think it's returned about 9% when the S&P 500 is close to about -2%. And even in years when the market performs very well, this portfolio does a very good job of not outperforming it, but it does pretty well respectively. And Ray Dalio is the founder of this, and he recommends the portfolio hold 40% of long-term treasuries. So that brings the total to $9,695.86. And a lot of people are gonna think like that's crazy for someone young like me to have this as like a top position or nearly $10,000 into it. But I gotta say the philosophy of that portfolio has consistently made great returns, and I think I'm gonna continue following it. I only put in a couple $100 a month into this fund, and I really just wanted to test it out, but I gotta say I'm pretty happy with the returns, and for other kind of volatile investing I do, it kind of helps me feel a little bit safer. Now the sixth largest holding in my portfolios is actually not a stock, it's not an ETF, an index fund, anything like that. It is actually Ethereum, a cryptocurrency. And I currently have an equity holding of $8,668.41. There's a lot of things I like about crypto, but one of the things I like most is over the last 6 to 8 months since I've been really buying crypto is that it was really cheap at the time historically to its trend line. And also I just believe in the philosophy of cryptocurrency, and I believe it will be a disruptor and the tech will continue to improve and you'll actually see the market cap explode. I've talked about this before, but cryptocurrency is only a $200 billion market, and I just relate that to how the federal government with a stimulus package created $2 trillion with a snap of a finger. Money is a huge market. I believe it's like $100 trillion market, so I'm very bullish. And specifically Ethereum and Bitcoin Cash. They're the only two cryptos I hold, and I think they'll do very well in the next coming years. And the seventh largest holding I hold in this portfolio is actually the VTI, Vanguard's Total Stock Market Fund. This is a very popular fund. You'll hear anyone with good financial knowledge recommend a fund like this one. It has a very low expense ratio, and you get access to the entire total stock market. You're betting on the United States, which has been a great bet for the last 100 years. And I hold this in my IRA with a total holding of $6,847.32. This gives me great diversification because I literally own so many companies. I don't remember exactly how many companies are in this fund. You can look it up, but it has a great track record of growth, and also, as I mentioned, has a very low expense ratio. All right, that brings me to my eighth largest position. My eighth and ninth largest position are two stocks that I own that I've never talked about on this channel because I felt like they were such risky investments to do. And I want to preface this. A lot of people want to get in the stock market and make money very, very fast. But I don't personally believe that's the best way to go about it. I think getting rich slow is the best way to get rich because it's nearly guaranteed. But not that I have the largest portfolio. It's starting to mature, and I do feel comfortable speculating small amounts of money, and it has worked out in a couple scenarios for me. But these are very risky investments. As you can see, most of my portfolio is actually indexed. It's buying large markets and giving me massive diversification, which really doesn't create a lot of downturn risk. So please understand that before I disclose these next two stocks that I own. My eighth largest position is a stock called RAFA Pharmaceutical. And it is actually the only MJ, if you know what MJ is. I'll put a picture on the screen here because YouTube does not like when people talk about the stuff. But it's the only MJ stock that I actually own. And I have $4,987.84 into the stock. It's a penny stock. I bought it around 24 and 27 cents and is currently trading at 88 cents now. I put like $1,800 into it, and it has grown quite a bit. I was introduced to the company, and I actually got a chance to speak with the former CEO, who's a large shareholder, and they explained some fundamentals as to why this company was likely to grow and be successful. They are well capitalized by money out of Russia, and they've made partnerships with Asian countries to produce MJ at very low prices, lower than what a lot of the Canadian companies that people buy on the stock exchange now. They can produce MJ for about $2 a gram when the market rate is about $8 a gram. And the countries they're producing in have 4 seasons to grow MJ, when in Canada, you really only have 1. The company is well capitalized, they have no warrants on their stock. So I took a little gamble, purely speculation, and it has worked out so far. Maybe we'll hear about this company more in the future. They have aspirations to join the NASDAQ, which I believe they need to get a stock price of about $4 a share. So we'll have to wait and see how that goes. My 9th largest position is another penny stock, and that is a company called Zest, ticker symbol ZEST. This was another speculative play. I went a little bit heavier on it, but it paid off really well. I invested $5,000 at about $1.27, and I've taken profits all the way up to as high as about $3.70, but I still hold $4,863.90 in the stock. That's all house money. And the story with this stock is that they have a huge lawsuit with Walmart for proprietary knowledge that was taken from them with their blockchain systems to help grocery chains limit waste. Their blockchain technology assures grocers that they know every step of the way that their food has gotten to their store, what temperatures it was taken from, what temperatures it was held at, how it was cared for, who took care of it, all sorts of information that is very transparent on their blockchain technology. And this was estimated to save grocers billions in lost and bad produce. After they demoed their product with Walmart, Walmart came out and created their own product called Eden. And Walmart ran with it and told people how they were gonna save billions and billions of dollars because of this new technology. So what does Zest do? They turned around and put a huge lawsuit on Walmart, and the stock prices really ran on speculation that there would be some kind of large settlement, or if it actually goes to trial, people think that this company actually has a chance to win. I don't really know, but I know I've taken a huge amount of profits so far, and I still trim here and there, and maybe I'll keep a little bit of money in there just to see if they get some kind of large settlement, because the company's market cap is somewhere around $150 million, but the settlement they're looking for is closer to $2 billion, which massively changes how big this company is. Purely speculation, be very careful with things like this. You can lose a lot of money, and I really recommend building a solid portfolio before you speculate, but make sure you talk to a financial advisor first before you take any risk with your own money. And that brings me to my 10th largest holding. And that again is in the 401k, and it's an index that tracks smaller companies. So I have $4,855.75 in this index fund that really focuses on smaller cap companies. And the thing with the smaller companies, they have much more room to grow. Just think right now, you have companies like Johnson & Johnson that have a $400 billion market cap that are trying to find a cure for COVID-19. If they find a cure for COVID-19, their market cap is not gonna double. They're not gonna go from a $400 billion company to an $800 billion company. But a very small company that no one's really heard of that has like $100 million market cap or $500 million market cap, a working vaccine for them to possibly inoculate like 8 billion people would massively change the market cap of the company, and the company could explode. So that's just an example, but smaller companies have a lot more room to grow. So for example, I mentioned that I have a fund that's in diversified dividend. Dividend companies are usually big companies that have lots of cash flow. This fund is getting me access to smaller companies that can grow a lot more, but also you gotta understand that there comes a lot more risk with that. Because when you're a small company, you don't have as much capital, and you may have a harder time surviving in different economic climate, and also competition can really do a lot more to hurt your business. So, those are my top 10 holdings in my portfolio that's getting close to $160,000. Let me know your thoughts down in the comment section below. What do you think of the portfolio? I actually think it's kind of kooky, you know, all the different strange holdings that are in there. I have several other holdings. I talk a lot about the Robinhood portfolio on this channel, and I really only had 2 holdings in my top 10 from that portfolio. And that's a portfolio I talk about most on this channel. But I really wanted to learn for myself what were my top 10 holdings and kind of come up with a philosophy on how I want that to look in the future. Am I happy with these 10 being my top 10? I'll be honest, not really. I like it to look a little bit different, and I'm gonna work on that. If you've enjoyed the video, please make sure to give it a thumbs up, and I really appreciate if you subscribe to the channel and turn on the notification bell if you wanna see future content. And also you can follow me on Instagram. I post there pretty much daily. I'll put my handle right here. And I really appreciate you guys watching, and as always, I'll see you in my next one.